My own experience has been that when you have a genuine gold bull market, which I think, but don't know, that we're in the early stages of, that the market beta, which is to say, in my definition, the extent to which the gold stocks themselves outpace the broad market, is substantial. And some investors, ones of my age as an example, 71 years of age, might do well to try to construct a portfolio of the 5 or 6 best gold mining companies in the world. In other words, participate in the beta that you might otherwise get with an ETF, but buy the higher quality companies so that you excise operating risk from your portfolio.
The gold market has been experiencing significant volatility, with recent trends showcasing challenges and opportunities for investors. RickRule, a highly respected figure in natural resource and mining investment, provides valuable insights into the current state of the gold market and its prospects. Rule, known for his decades of experience and profound understanding of commodity markets, suggests that gold must reach approximately $2,750 to $2,800 in constant dollar terms to experience a real breakout. This perspective comes when the gold market is facing turbulent conditions. On Wednesday, gold prices sharply declined during early trading hours, reflecting global markets' broader indecisiveness and volatility. Despite this setback, many analysts, including Rule, remain optimistic about gold's long-term prospects. The $2,500 level is being closely watched as a critical psychological barrier, with the $2,480 mark potentially serving as a support level due to market memory. Interestingly, gold has emerged as one of the world's top-performing assets this year, second only to cryptocurrencies. Recent fund flows further evidence this impressive performance. According to BofA Global Research, gold funds have attracted $1.1 billion in the past 4 weeks, marking the most significant monthly inflows. However, it's worth noting that there's still a net outflow of $2.5 billion year to date, suggesting that gold's strength may come from sources outside traditional fund flows. While gold bullion has been rallying, the performance of gold mining stocks has been comparatively subdued. Rule attributes this lag partly to the sector's poor performance during the 2000 to 2010 decade. He points out that many gold companies failed to increase their free cash flow per share during this period, despite a significant rise in gold prices. This historical underperformance has likely contributed to investor skepticism toward mining stocks in the current bull market. Please tune in for our exploration of RickRule's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
When people do gold in constant dollar terms, we would probably need 27.50 or 28 to have a real breakout. So it's good that you differentiated that for your audience, because many people don't understand that concept, which is distressing, given that the purpose of gold is real as opposed to nominal savings. Now, to your question. Bull markets traditionally follow a fairly consistent path, which is to say in commodities, the commodity moves first, and then the biggest, most efficient producers who can turn that commodity price increase into margin increase moves second. The move in the gold stocks has been constrained, I think, because the investment community has a memory of the performance of the gold stocks in the decade 2000 to 2010, which was pitiful. The gold price moved, if my memory serves me correctly, from about $2,500 to about $1,800, which is to say a 7-fold increase in the gold price, and the free cash flow per share on the XAU fell. It took skill to turn a 7-fold increase in the selling price of your commodity into reduced cash flow per share. So the expectation around the gold stocks, not merely in the general investment sector, but specifically among gold investors, is a terrible pun, but tarnished. What I think people are missing is that institutional investors in particular and sector investors are holding the managements to much higher standards now. And I suspect for the next 2 or 3 years, at least, that there will be much more fiscal discipline in the sector than there was. You mentioned Agnico Eagle as a bellwether, as a leader. That's because they've been a leader in the deployment of capital for 15 years. It's because they have been leaders in constraining their all-in sustaining capital costs. They've been leaders in selling off marginal assets and upgrading the quality of their portfolio. They haven't been a leader just because the gold price went up. They've been leaders because they've outperformed other companies in the sector. Investors, too, need to look at themselves, what they're trying to accomplish. My own experience has been that when you have a genuine gold bull market, which I think, but don't know, that we're in the early stages of, that the market beta, which is to say, in my definition, the extent to which the gold stocks themselves outpace the broad market, is substantial. And some investors, ones of my age as an example, 71 years of age, might do well to try to construct a portfolio of the 5 or 6 best gold mining companies in the world. In other words, participate in the beta that you might otherwise get with an ETF, but buy the higher quality companies so that you excise operating risk from your portfolio. For those who are, pardon me, Jesse, for those who are seeking alpha, of course, you need to come down the quality trail. You need to come down to the single asset producers that will be consolidated or taken over by multi-asset producers with a lower cost of capital. You may come all the way down into exploration, which has treated me well, but exposes you to a lot of risk outside the gold price. But I think it's important that one of the things that your listeners do, Jesse, is that they assess themselves. They assess how much work they want to put into investing. They assess how much risk they want to take, and they adjust their time preference to reality. You probably know that I have now graded over 80,000 portfolios for investors in the last 6 years, and I've learned a lot about the mistakes that investors make. What are they? Assuming more risk than they realize that they're assuming. Having a portfolio of penny stocks is not the same as investing. It's speculating. Nothing wrong with speculating, but you need to know what you're doing. The second is not doing enough work. I advise people to own the number of speculations that conforms to the number of hours per month that somebody wants to spend.
The gold mining sector is experiencing a period of mixed fortunes. Major players face operational challenges, while industry experts see potential in both established producers and speculative plays. Gold Fields, a significant player in the industry, has recently faced setbacks. Due to persistent issues with critical projects, the company issued a second guidance downgrade. The company's Salaries Norte and South Deep operations have fallen short of expectations, leading to an adjustment in projections and raising concerns about the miner's near-term operational stability. This situation underscores gold mining operations' inherent risks and complexities, even for well-established firms. Newmont Corporation, despite recent underperformance, may be turning around. The company has faced production issues, dividend cuts, and a share-dilutive acquisition. However, recent results show promise, with inline production figures and better-than-expected revenue and EPS growth. Strong free cash flow generation and early share buybacks suggest Newmont could be a bargain for value-oriented investors among gold miners. Industry veteran RickRule offers a balanced perspective on the gold mining sector. He emphasizes the importance of focusing on high-quality companies and highlights potential opportunities in speculative investments for risk-tolerant investors. His comprehensive overview provides valuable insights for navigating this complex sector. Let's get back to the interview.
It's worthy to note that unlike the big 2 miners concentrated in Nevada, they're concentrated now in Northern Ontario. But if you look at their reserves and resources on a 100% owned basis, rather than the 42% owned by Newmont or the 58 or whatever it is percent owned by Barrick, the equivalent ounces are the same. So I'm attracted to Agnico Eagle. You may know that I had Sean Boyd at my Natural Resources Investment Symposium in Boca Raton. I had the great pleasure of having him for lunch and really got to get in his head about how he built Agnico Eagle and how he continues to function as chairman now that he's no longer CEO. So I would consider that the bellwether operator. Endeavour Mining in Africa has sold off like a boulder off a bridge after thanking and excusing their CEO for financial improprieties. It doesn't change their status as a low-cost producer, nor does it change their development pipeline, although there is some concern that some of the operating management left to go to a new company, Lundin-backed, called Montage. But I would look at Endeavour for people who have the courage, the political courage to operate in West Africa. But people really need to focus on the highest quality names. And I would say the highest quality names are, respectively, Franco-Nevada and Wheaton. Franco is particularly attractive because it's underperformed, because an asset which was 14% of net asset value, the Panamanian asset, was at least temporarily nationalized. The arithmetic around this from Franco shareholders' point of view is interesting. The stock declined 42% because 14% of net asset value went away. It shows you that most speculators are very, very, very bad at arithmetic. So I think that's a reasonable smattering of names that people can look at. Coming down the quality trail a little bit, I think if you see any big sell-offs, in G Mining, now that they've acquired Reunion, that would be worth looking at. A lot of Reunion shareholders owned the stock because it would be taken over. Now that it's been taken over, they have no continuing reason to own the stock. But the truth is that building out that deposit by the G Mining team, the best qualified team in the world to build it, will ultimately develop into a multi-asset gold mining company, which will be higher priced. If the share price of G Mining doesn't respond, I suspect that you'll see G Mining itself be taken over. My hope would be by Lundin Gold. Understand the Lundins don't listen to me particularly with regards to things like this. Coming down the quality trail again, probably getting to your question, G2 Mining, which is across the property boundary from Reunion, has to be taken over. Gold Fields is a shareholder there, probably because they want to participate ultimately in the consolidation of that district, but it has to be taken over. So I think that's something that's worth looking at. It might not happen for 2 years or 3 years. And people who are going to have trauma holding stock into the fall would be well advised not to consider that name. Another speculative name I like a lot is Snowline. Sold off a lot because of the heat failure in the Yukon. The idea that an advanced exploration stage project sells off because of a temporary hiatus in permitting in the Yukon is hugely amusing to me. This is likely a 10 million ounce plus deposit, very good grade. Yes, there are challenges. It is in the middle of nowhere. But the exploration upside hasn't been factored in. So provided, Jesse, that your listeners do what you instructed, which is to say have a speculative bent and are willing to do the work, those are some names that I think are more likely than not to work.
In this environment, savvy investors may find opportunities in established names, showing signs of improvement and carefully selected speculative plays. They should always keep in mind the sector's inherent volatility and the need for careful analysis before making investment decisions. Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.